Big effort, result, meaning big volume, small candle. That is a trap. The market is trapping the buyers. Low effort, strong result. We're starting to see a little bit of distribution. And so what he was talking about in effort versus result is basically how volume, i.e., the participation we're seeing in the market, if we match that with the size of the candle, it can give us a really good edge going into the immediate next move. Doesn't always work out that way, obviously, but that's what basically effort versus result is all about. It's comparing the size of the volume versus the size of the candle. And if they're matched, that effort is real. Wyckoff would say you're going to see continuation. If you see big effort, small result, Wyckoff says that's a trap. I don't use that language. I say that's slowing momentum. Remember last week's conversation on candlestick analysis? I talked about the size of the candle equates to the momentum condition. Well, when you have big red candles, you have a tendency to continue until something changes. When you have big green candles, things have a tendency to continue until something changes. What Wyckoff is saying is yes, and now let's also include the volume with that type of candle analysis to help us understand the true nature of the participation that is equating to the momentum we are seeing in the market in that situation. Does everybody understand the effort versus the result and how it can help us understand the immediate impact of that analysis? Is everybody good on effort versus result? Okay. Now, cause and effect. Don't get trapped on a big volume bar on a small candle, Nacho. That's the trap there, especially in an overextended situation. All right, cause and effect. I can't see the market without cause and effect. I just can't. It sticks out to me like a sore thumb.